go over the IRS Interactive Tax Assistant that answers the question, are my Social Security or Railroad Retirement Tier 1 benefits taxable? So uh, there's a lot of questions that people ask sometimes who are Social Security recipients, and the truth is that your Social Security benefits are treated differently from other forms of income. And so for purpose of this video, I will instead of saying everything, I will refer to them as benefits, whether it's Social Security or Tier 1 Railroad Retirement benefits. Uh, they're kind of similar. They're different though, but this tool will help people understand whether or not their benefits are taxable. If they are taxable, they are taxed at either 50% of the total benefits are taxed, or for taxpayers, the most that exceed a certain threshold, then they can be taxed 85% of the total benefits can be taxable income. You'll never see a situation, even at the highest tax brackets, where 100% of your retirement benefits are taxable. Conversely, you can be in a lower income tax bracket to the point where 0% of your retirement benefits are taxable. So while you can read about all of this in an article of your own, you can also use the Interactive Tax Assistant, where you go in and answer various questions. Now, if you're living in a foreign country and you're receiving benefits, this isn't going to answer the question for you. There's probably some nuances that you can find in publication 54, which is the tax guide for U.S. citizens and resident aliens abroad. It also doesn't apply to international taxpayers. According to the IRS, this should take about 9 minutes from start to finish. We'll play around with this. We'll kind of go back and forth with some different scenarios, and we'll see how long it takes us to get there. You will need some information. You're going to need information about your gross income, and then either your form SSA 1099 or your RRB 1099. You'll need to know what amount is reported to you in box 5. So let's go ahead and begin. So this is an ITA that covers 2020, 2021, and 2022 tax season. We're just outside at the time of this recording, we're outside the filing window for 2023 taxes. But let's go ahead and pretend that we're talking about 2022 tax year, since that's the most recent information we have. So we can select our filing status, and keep in mind, anytime you see these blue highlighted fields, you can click on them. It'll open up to another page, and it'll say your filing status determines your tax rate. So this is the am I married, single, married filing jointly, head of household, qualifying widow or widower, married filing separately. So let's see what we have available. Oh, qualifying spouse with a dependent child, married filing separately. So let's hit that one and just see what happens. Did you live with your spouse at any time during the tax year if you're living filing separately? Did you receive Social Security benefits that doesn't include benefits received for your dependents? So let's say yes. Are they related to injuries incurred as a direct result of a terrorist attack? Let's say no. And then what is the total amount of your Social Security benefits reported in box 5? Let's just say that that's $20,000. Did you contribute to a traditional IRA for the tax year? So for taxpayers, you could be completing this all the way up to your tax filing deadline for the tax year, and still, you can play with this scenario back and forth all the way up through the tax filing deadline. So you could be in, let's say, March of 2023 and still make an IRA contribution for 2022. Or probably the more likely scenario upcoming is in 2024, before April 15th, if you wanted to make a traditional IRA contribution for the 2023 tax year, you could absolutely do that. Were you covered by an employer plan during the tax year? Let's just say no. Did you receive a lump sum payment for a prior year? No. What are your taxable pensions, wages, interest, dividends, and other types of taxable income? Let's just say it was $10,000. Did you have any tax exempt interest? No. Did we have any qualified U.S. savings bond? The interest on that may be excluded from income under an education savings bond program. So let's just, out of curiosity, see what that says. So the education savings bond program allows you to exclude from income all or part of the interest that you receive on the redemption of qualified U.S. savings bonds during the year if you pay qualified higher education expenses during that year. That's known as the Education Savings Bond Program. There's actually a tax form that you can use to exclude your income from that. We'll put a link in the show notes for you in case you're curious about that. What is a qualified savings bond? Well, it's a Series EE bond issued after 1989 or a Series I bond. And it has to be either in your name as a sole owner or in yours and your spouse's names as co-owners, and you have to have been at least 24 years old or older before the issue date on the bond. So the reason these are, kind of stipulations that are in place is because, otherwise, if you just gave them to your kid and they redeemed them, they might not qualify. They might not use it under qualified education, costs. So this is specifically for a tax benefit for the parents. What was your employment status? I was employed. Let's just say that. We didn't receive any adoption benefits from the employer. We didn't have income from outside the United States. Did you have adjustments to income other than the student loan deduction? So let's just say we had $2,000 of adjustments. Was there federal income tax withheld from the Social Security? Let's just say no. So in this case, it spits out a number. Your taxable Social Security or railroad retirement benefit is $15,300. And that appears to be about 85%. So, let's go back and play with this a little bit, and let's just see if having a larger adjustment to income would have made a difference. Because you can use this in a hypothetical situation, and here we go, $11,900 ends up being taxable. So let's say that we weren't employed. And then let's go back and change this number to 0 and see if that impacted our taxability. Well, you know what? Let's go back and change the taxpayer filing status, because that definitely will change. So let's change this to married filing jointly, and then let's continue with the rest of it. So let's imagine that the original taxpayer, you, received $20,000, your spouse received $15,000 in Social Security benefits. let's say we did not contribute to an IRA, and we're going to say that we were also, we only had like $5,000 of income, and this was, really not from employment or anything. So we didn't have any tax exempt interest. Let's just keep that going. We're trying, now we have to basically kind of answer on behalf of both spouses. So we're clicking double. Did our spouse have income from outside? No. Were there any adjustments claimed? Was there federal income tax withheld? So it looks like in this situation, if you're married filing jointly, then none of your Social Security benefits would be taxable. So I always like to cover this a little bit in depth because it allows you, if you were going to, use this information, first and most importantly, you should recognize that this is not legal advice, it's not tax advice, but it is something that taxpayers can use as a tool to help inform how they're going to report on their tax return. So in this case, if you were required to file a tax return, this specifically says enter $15,000 for the Social Security benefits, 0 as the taxable amount. So you can use this in your records in case you were ever actually audited. But one thing that you really want to do is make sure that you answered each of these questions correctly. Because if it does come out in an audit that your questions here aren't necessarily what's reflected in your tax return, then you want to catch that mistake here and do the proper reporting. Doing the proper reporting will make it less likely that you're going to be audited. And if you're supposed to pay tax on a certain amount of your Social Security benefits and you don't, that's going to be the most likely scenario of an audit. So, you want to make sure that every one of these questions, you take the time to review that, and that these actually represents the facts on the ground. And you could always print the screenshot for your records. So there's a little print button here. You can always print that. And anytime you use the ITA to help navigate a certain question or move through a situation, you should always print that out, review it, and then if you're okay with the answers and the results, keep that as part of your records internally. So that's all we have for this video. The IRS Interactive Tax Assistant tool helps taxpayers complete a wide variety of questions and obtain a lot of information that you can get manually elsewhere, but it makes it a lot easier for you to work through these tax assistant tools on the IRS website for your own education. So we'll put links to the tax assistant website in the show notes. We'll also put links to relevant articles that we think might be helpful for your situation. So if you're interested in any of our articles, please check out our website, teachmepersonalfinance.com. If you're looking for advice on a specific tax form, we've written lots of articles on a variety of tax forms, and you're more than welcome to read any of them as you see fit. If you like our YouTube videos, please subscribe to our YouTube channel. We're always striving to put out videos every day, and every time we put out a new article. So if there's any questions, comments, or if there's a topic that you would like me to produce a video about, please hit me up in the comment section. Thank you very much and have a great day.